Futures trading is risky and can result in substantial financial loss. Good evening, traders, and welcome to another edition of Short-Term Trading Live with Oscar.
Traders, do you remember that? Do you remember that day? Well, that day is 1 year to the day that we began doing videos, and you know what today is? It's our anniversary! Happy anniversary! Oh, here it comes, they're going crazy! Happy anniversary! 1 year to today! We've been doing videos for an entire year! Happy anniversary! Alright, lots of fanfare over here. Not too much confetti for some reason, but what's up with that mic? They're not working? Alright. And I'll tell you what, traders, we have a whole lot of good things that we want to show you. There is going to be a great video, but first, let me get out of this and break out. I'm breaking out, and I'm getting ready to get serious, traders, because there is a whole lot that I want to show you. So you better pull up a chair, and you better get a pen and paper, because what I'm going to show you next in the weekend webinar, and this is the week ending 12/15/07. Again, we started our first video 12/15/06, and boy, I have done a lot of great lessons, and I've met a lot of great traders since this began. And I must say, I am so thankful for you traders. You come to my site every day. The fan base grows larger and larger, and the lessons that you guys have absorbed, you traders, I am just shocked. I never realized I'd have such great students. I could list so many of them. I will say this, Trader Vision Christian, you know who you are? You are the OMNI of the month, dude. Your analysis, the homework that you send me, Trader Vision, I am so proud of you as a student and all the rest of my students. But I must say, if we were having a race, you are out there in the lead with what you've learned in your analysis. So one more round of applause for you, Trader Vision. Okay. With no further ado, I have a lot of charts to show you, traders. There's a lot of stuff going on out there. And you know what? I think the market has a little problem. You see this bottle? I think the market has dandruff. I don't. It's not for me. But I'm telling you, the market has some dandruff. And I'm going to show you why right now. Let's take a look at the charts, traders, and then we'll come back and talk a little bit. Okay, traders, this is not a product endorsement by any means. You see the name on that? That is the same name as this formation right here. In the last few videos I've done, I've talked about the head and shoulders. In fact, I've been harping on my OMNI about these head and shoulders, and I said that this is leading to a fundamental shift in these markets. Now let me explain this again, and let me explain why I feel this way. This is a currency market, the Japanese yen. I have shown these head and shoulders in the last few videos, and look at what's happened. You have shoulder, head, shoulder. It is an upright head and shoulders. That makes it a bearish formation, and look at the ensuing move that has taken place. Down, down. Here's where we are now in the yen. That's one chart. Let's look at more. Okay, traders, next we're looking at the Swiss franc, the March contract. You know what this is already. You have the shoulder, the head, and the shoulder. You think these markets don't have dandruff, huh? Look at this. Down it goes. Just like they're supposed to go. It's a head and shoulders formation, which is upright. That's another currency. Again, we've looked at this the last 2 weeks. We've been talking about these, and here they are. They're starting to show you what happens when the market comes out of the right shoulder of an upright head and shoulders. Let's keep looking. Okay, now we're looking at the Australian dollar, traders. The March contract, the ADH8. Shoulder, head, shoulder. Look at this break that we had. Another head and shoulders formation, which we have looked at for the last few days, maybe last few weeks. We've been talking about it, but I've been really leaning upon this the last few days and trying to get my OMNI to see what's going on. Maybe now you will see, as I continue with more charts, that these head and shoulders are calling for the downside. Now, these are the currency markets, right? Let's look at another one. The euro currency traders, look at this shoulder, head, shoulder. Look at the size of this breakdown that we witnessed on Friday. The head and shoulders formations really, really do work well. Traders, if you grab a textbook, anyone's textbook about formations, anyone that's written about commodity or stock formations on charts, you will see that they will tell you that one of the most reliable formations that you will find is the head and shoulders formation. Here's another one. Okay, another currency, another breakdown after the head and shoulders was formed. Here's where it really gets interesting, traders. This is the dollar index. The dollar index has a head and shoulders formation, but it is not an upright head and shoulders. Instead, it is an inverse or inverted head and shoulders, whereas if, let's say, the man was standing on his head, this is his head here, shoulder, shoulder, that is a bullish signal. Look at the breakout that's ensued since the head and shoulders, since we came out of the head and shoulders, traders. That is what happens when a market comes out of a head and shoulders, whether it is inverted or upright. The head and shoulders formation tells you the likely direction of the market in a very high percentage. It'll tell you with a very high percentage of being correct that the market is going in a certain direction. Again, if it looks like this, it is bearish. If it looks like this, it is bullish. Keep that in mind. Let's look at more charts here. Okay, when I mentioned that this market has dandruff, well, here you go, traders. This is the Emini Russell. Shoulder, head, shoulder, and look, it's starting to come out of it already. This is a market that wants to break down, but now we're looking at the indices. Let me show you a few more charts. You've just seen the mini Russell, the head and shoulders. It looks like this, which makes it bearish. Well, watch this. I'm going to show you a couple of more now. Okay, traders, next on the block, you have the Nasdaq, the March contract for the Nasdaq, the ENH8. This is a daily bar. You already know what this is, right? A head and shoulders, everyone knows. And look, we're starting to come out of that head and shoulders and at the same time beginning to come out of our wedge. This market, another indice market, with a bearish head and shoulders, telling us that it's likely going to go down. There are more. Remember, you looked at the markets just before this. They were the currency markets. They had head and shoulders. They began to break. Now you're looking at head and shoulders that haven't broken yet. So keep looking at these charts and you'll see what's coming. All right, traders, this is the Dow Jones Industrials cash market. Look at this. This is a very intricate chart. You have a shoulder, a head, and a shoulder. And the market broke down. It came back up. It put in a shoulder, a head, and a shoulder. And the market broke down. Comes back up again, puts in a shoulder, a head, and another shoulder. And now we're about to come down below the 200-day average coming out of that shoulder. But more interesting than that, the whole thing is a massive head and shoulders. Look at this. You have the whole thing right here. It is huge. It is a head and shoulders with 3 sets of head and shoulders within it. That is very bearish, traders. I am telling you now, the likelihood of this market breaking is very high if you're a technician and you're basing it on this formation. Let's continue forward and see if I can make this case for you. We are now looking at the March S&P, the SPH8. You have a head and shoulders formation. The market breaks down, makes its way back up, and right now has a head and shoulders formation, and the market is getting ready to break down. But once again, like the Dow, the whole thing is a head and shoulders formation. Look at the size of it. We are getting ready to break, traders. You know me, I try to be very, very proactive in my analysis and, of course, reactive when it happens. This, I am telling you, I've been saying it for days on end. It's not normal to have this many sets of head and shoulders across the board in currencies, in indices, and not only in the daily charts, you'll find them in the weekly charts, and you'll find them on shorter term intraday charts. There are head and shoulders everywhere. It is an indication the market is telling us it needs to move, and it will move. Do we know which way it's going to go for sure? Well, nobody can ever tell for sure. But when you have this many bearish formations all coming together at the same time, likelihood is the writing is on the wall. Let's continue to look forward. Not only are there head and shoulders formations that are very bearish in all the indice markets and the cash markets, you've seen them in the currency markets. Now we are looking at the QQQQ chart. You can actually make a case for this right here being a head and shoulders, but better than that right here. I don't know if you can see that as clearly as I can, traders, but right here we have a mirror image formation. A mirror image formation. It's a patented Oscarism. Any of my Omniacs that have been around me knows that this formation is something I've been using for a good 20 years now, and it generally is 2 days of the exact same size with opposite opens and closes. If on the third day the market comes in and goes lower and settles down here, you have a bearish breakdown. That is what a mirror image will do. They are very reliable traders. Come to my site. I can teach you about that. I can prove that to you. It is one of the most reliable formations I have ever found and been using since I'm an 18-year-old and a newbie in this business. So look for it. Pull up your QQQ charts and take a look. We have all three parts of a bearish mirror image right here before your eyes. Let's look forward. Traders, this is the Dow Jones Transportation Average. Look right here. You know what that is? That is leg 1 and leg 2 of the mirror image that I was just pointing out to you in the QQQ. The QQQQ, we call it the Qs. Right here you have leg 1 and leg 2. If on Monday this market opens up, goes to the middle of the range and breaks down and settles lower, we have an absolute sell signal in the Dow Jones Transports. Traders, this amount of formations being bearish, all coming together at the same time, amounts to me, in my interpretation, it is a fundamental shift taking place in our markets. Let's look at something else. Okay, traders, the Dow Jones Transportation Average once again. Here is leg 1 and leg 2 of that mirror image. This I put in. This did not happen yet, this little gray bar. But if, in fact, it looks like this on Monday, we have our sell signal. I blew this up purposely because I want you to see that for yourself. It is absolutely a mirror image, and it is absolutely going to be bearish if, in fact, we settle lower than these two tomorrow, or let's make that Monday. Now, if for some reason we end up opening higher and settling up here, it will be a bullish signal, and these markets will go up. I am that convinced of my mirror image formation. I have tested this thing 1,000+ times since I've been using it. It never seems to fail us. Go pull your charts, traders, see if you can find these formations and tell me what happened after the third leg was in. Okay, traders, so you've seen the charts. Did you see that? You think I'm kidding about the dandruff? I am telling you, these markets have they need head and shoulders, I guess, because, you know, every chart that I look at has a head and shoulders formation. It's unbelievable. And you know what? I would like to give a shout out to you, Buy Low. Thank you very much, Buy Low. You know who you are. Buy Low gave me an email and gave me a heads up on the two mirror image formations I just showed you. So I was doing my homework, and I didn't even get a chance to get to the QQQs or the Dow Jones Transports, but I had an Omniac out there paying enough attention to bring that to my attention. So Buy Low, thank you so much, dude. You got a good eye. You were dead on target with both of those. So, You're the man. I'm glad my teachings are coming across. This is great, guys. We got OMNIX everywhere learning from this. All right, so back to the markets. I will repeat what I said during the chart segment. I showed you last week a couple of videos. I said, look, there are head and shoulders formations all over these indice markets and all over the currency markets, and there's an inverted one in the dollar index. That tells me the dollar should go up and the currency should pull down. What happened? Exactly what should happen when you come out of a head and shoulders formation. The dollar took off. It's been going up for days, and the currencies have been getting ransacked lately. So the point behind that is, whether I call it right or not, who cares? It's not what this is about. It's about whether you realize the power behind those head and shoulders that we're looking at. Now, all the indice markets have them set up exactly like the currencies did, and it looks like it wants to go lower. Now, interestingly enough, you put up a DAX chart, and the DAX has an inverted head and shoulders just like the dollar index did. So maybe the DAX wants to go up, and our market wants to come down. Whatever it is, again, I'll repeat, this is amounting to a fundamental shift in our markets, possibly meaning what the Fed has done in lowering our dollar has began to take an effect. That is what I'm saying by a fundamental shift. I think that these markets are getting ready to turn. And what happens with a market as big as the S&P when it's going to finish off a move? It has a capitulation. It has a week where it just breaks and breaks and breaks, and everybody's screaming, and the people in the TV land are going, oh no, it's the end of the world, the markets are going to crash, and everyone panics, and we have the big, big drop, and then it stops cold. That would be capitulation. That would be what we would expect in the end of a move with a market as big as the S&P, and I think that's what these indices will do on the downside. We will get the breakdown, it'll cool out, and then the final shift will begin to take place where our market can go back to new highs at some point. That is what I have just shown you. Everything like an algebra question or an algebra example, the equation, the answer to that equation is the fundamental shift is beginning to take place. So let's see what happens with that. Pull your charts, do your own homework, and tell me if you don't see the same thing that I showed you. And now the importance of doing your own homework is this. Go back, even if you have to go back a few years on your daily bars, find another time where so many markets had a head and shoulders formation all at the same time, if you can, and see what the end result was. Okay, so that's about the charts. Next, I have to speak to one of my OMNIX out there. Dr. Angie, you know who you are. Dr. Angie, I read something that you put in my forums on Friday. Not in my forums, right in the chat room, in one of my chat rooms. And you stated, okay, I got to leave. I have no stops in, and I hope I'm going to be okay. You said I have no stops in, and you're one of my OMNIX. Are you crazy? Dr. Angie, it is not allowed. If you want to be a good OMNIX, place your stops and place them first. Anything can happen to you if you are in your car, even for 5 minutes, going from point A to point B with a position on and no stop for protection. Dr. Angie, do me a favor. Be a good OMNIX. Don't ever let me read something that you type again that says, I do not have a stop in. Traders, put your stops in and put them first at all times, at all costs. Don't ever let me hear you have a position without a stop. That is the only way you will be carried out, so to speak, and never be able to trade again. The only times I've seen traders really lose it all is when they've had positions on with no protection. Put on your protection. I'll bet you don't go around this world without having some kind of insurance, right? Insurance is protection against disaster. Well, a stop is insurance. Put on your insurance when you're going to trade. Okay, traders. I hope what I've presented to you here will absolutely help you try to develop a picture of where we're going next. Try to develop a trading plan to capture that, and then stick to your plan. Stick to your guns. I think it's going to work. Looks to me like, oh, it is our anniversary, right? I think the OMNI, I think I'm going to show you the OMNI. Come here, Goliath. Come here, baby. There's my boy. Come on up here and say hello. Come on up here and say hello, buddy. Up, up. Here's the true OMNI. Come on, baby. Come on. Come on up here, show everybody who you are. Here's where we get our recommendations, traders. This is the Omni right here. Here's my boy, Goliath. He's the guy that gives us all the good calls. Right, Goliath? There's my baby. There you go. Keep giving us those good calls, kid. Everybody loves you. There's the Omni for all you Omniacs who wanted to know. There he is. You traders in my room, you know who he is by now. Thank you, Goliath, for all your good calls. All right, so traders, back to seriousness. Remember, no joke. Take a look at these charts. Something is going to happen here. All right, traders, that's about all I'm going to do in this video. I will say this. If you'd like, please give us a call, 702-629-4755. If you want to learn more about these formations, how I find them, how I view them, and what they mean, come join our academy. It's the Omni Trading Academy, and you can find us at www.livewithoscar.com. Don't trade alone, traders. Don't sit by yourselves at your computer. Come on down to our site and join our ever-growing community of Omniacs. We teach every day. You know, during the day, I spend my entire day giving guidance, giving lessons on the mentality that you need to trade these markets and not get nervous. And I certainly do technical analysis lessons throughout the day. I am here to help you. We have a staff behind me. They are here to back me up and to back you traders up so you can get through these trading days. So come to the site and allow us to help you bridge the gap from the days of old when you used to have a trading pit where you could call somebody, you could call a professional down there, and he would tell you what will happen next and maybe be right, but they had good information. Well, the days of the pits are rapidly drying up, traders. As you know, these days everything's become electronic. The S&P Mini is completely electronic. There's no brokers in the pits. That is all done on computer by people sitting by themselves. Don't sit alone. I'm telling you, there is strength in unity. Come with us. There's strength in numbers, baby. All right. Do your own homework. Place your stops first. Got the range. You don't forget what I told you. All right, traders. That's about it. I'm going to get out of here. If you haven't joined my Gold Class membership, come on down to the site. I'll give it again. It's www.livewithoscar.com. Become a Gold Class member and come into my classroom. We hold a class every single day so that we can teach you to be a better technician and a better Omniac. All right, traders, say this to yourselves every day, every morning, every evening, every time you're going to place an order. Absolutely say it when you have a position on, because you know that what I'm talking about when I say you can get nervous and you can make these emotional decisions and you're buying the top and you're selling the bottom and you came in and wanted to be long and ended up finding yourself short. All of that happens because you've allowed your emotions to get involved. Now, this can help you. It is at least the tip of the iceberg. It's one of the things you'll learn at the Omni Trading Camp. And you know what that is, traders? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.